What's up, guys? It's Migs with Market Open. This will be episode number 2 for Mentorship Mondays. Today I wanted to cover something a little bit more in depth of what I usually go into on the recap. So sometimes in the recaps you guys will hear me talk about the market's going up, the market's going down, it's going sideways, it's kind of choppy, or my expectations on what it should be doing. So I kind of want to break that down a little bit more. So usually when I'm talking about the market, I'm talking about the SPY. Which is an index of the top 500 stocks in the market. So it's the most popular index of the top 500 stocks of mostly large cap companies. So you have to have a minimum of 6.1 billion in a market cap to be on the S&P 500. So then the S&P 500 is the market value weighted index. It's one of the most common benchmarks. It is actually the most common benchmark for the US stock market. Let's see here. It is actually seen as the leading indicator for U.S. equities and a reflection. So it kind of gives you an overall, what's the word I'm looking for? Sentiment, basically, of the market. So it'll tell you if there's fear, if there's a lot of greed, what overall investors are doing in the market. So let me go back to S&P 500. So basically, on a stock on a day-to-day basis will do as the market does if you're in the large cap market. So if you're within that market cap of above 6.1, I believe it said billion, you're going to follow what the market itself is doing very closely, not exactly to the T. But if it's going higher, most likely the stock itself that you're looking at that is within the large market cap will be going the same direction as the SPY. So what I mean by that is if you take a look at here, I have up the SPY and I have Apple as well. So obviously Apple is one of those large cap companies that qualifies and is also in the S&P 500. So if you can see on here, it basically makes the exact same moves as the S&P 500. So, and is also one of the tools that traders use is basically a crystal ball to be able to predict what a stock is doing. So like let's just say for instance that you're long in a position and that you notice that the market actually starts selling off sharply out of nowhere. That's one of those times that you want to reconsider your position or perhaps start lightening up the load, because one of the things that you will always hear me say is when it rains, everybody gets wet. So what I mean by that is if the market starts tanking, that means the stock that you're in most likely will start tanking as well or suffer some sort of losses during those times. So now, back to the SPY and Apple. So if a stock doesn't have a catalyst on its own, and by catalyst I mean some sort of news, perhaps like a press release, earnings, or something to be able to push the price either up or down, it will follow the market. So I have on here Apple. As you can see, it was kind of choppy sideways at first. It kind of dipped down. SPY did the exact same thing and then it started pulling up. Now this little dip right here, you can also see it on Apple, and then see it breaking over the highs, starting to break out, and it actually ended up exactly in the same spot. So basically almost all the same candles. So these two little green candles, green candle, red candle. This one's actually a little bit different, but ideally, you get the point. So they're gonna mirror each other basically. So could you possibly go long if the market's heading higher? Can you technically go long on Apple or Facebook or something like that? It's a little iffy because sometimes Apple will move first and then the SPY will follow, or sometimes the SPY will go and then Apple will go. So there are other stocks on here that do the exact same thing. So for example, I know Visa is another company that closely resembles the market. But as you see, it's not really exactly the same as the SPY, but in general direction, it's basically doing exactly the same thing. So it is headed higher just like the market, but it doesn't really quite follow it to the T. Other companies, so like Facebook, it's one of those large market cap companies. So market's headed higher, Facebook is also headed higher, but it didn't really quite have this dip like the market did. So as you can see on here, it was a very short dip in Facebook overall, and it just kept going up with the trend. But now there are other companies that are also in the large cap market that don't quite follow the SPY to the T as well. And it might be a little bit messier as well. So let's see here. So Netflix, let's see here. Yeah, so Netflix on here basically did the exact same thing as the market, but it's a little bit steeper, and it was actually climbing a little bit faster. Now, I believe, why do I do that? So Tesla on here, large market cap as well, but it's a little bit messier and actually ended up selling off during the end of the day, unlike the SPY headed in a little bit higher. So there are within the same market cap, but they don't exactly mirror each other. I'm not sure if like Tesla was under some sort of pressure during the end of the day, or there's constantly news reports out on it, so it doesn't necessarily have to follow the SPY. Now, something else too that you might want to consider, it's just an extra tip for when you are either swing trading or when you're day trading. If you're day trading, you want the market to be able to pick a direction, so you know that it's trending higher, and you want to be able to go long with the market. Because if your stock has a positive catalyst and then the market is also headed higher, you have a much better chance of the trade working out in your favor, and you'd be able to get those profits out than if the stock is headed higher and the market is headed lower. At one point or another, the SPY will catch up to that stock and it would actually start pulling back. Not all of the time, but there are higher probabilities that it will catch up to it, or it might not go up as high as if the market was green. So for example, I forgot exactly which stock it was the other day, but it had phenomenal earnings, but during that day the SPY was actually pulling back really hard, and during that day, instead of the stock going up, it actually just started kind of going sideways. So they kind of canceled each other out, and the stock was not able to, it didn't really have enough buying power for actually there weren't enough buyers to come into the stock because the market was selling off so hard. So it kind of just decided to go sideways, and it was just kind of choppy basically all day. But at least it didn't really quite sell off. So the investors didn't really lose too much money because the stock was just kind of going sideways. But just remember to have the SPY and the index kind of going in the direction that you want to be trading. And then also the same thing applies when you are swing trading. So you want to be able to pay attention to the daily candles on the SPY, because that's what you're looking at when you're swing trading most likely. Is if you think the market's going to go higher, you want most of your swing positions to be long. And if you think the market's going to sell off, then obviously you want to be on the short side, even if you're swing trading or whatnot. So then that will definitely make your odds go higher, and for you to be able to pull out more profits into the market. So that's basically all the info I have for you guys. That's kind of a brief overview of how I use the SPY for my positions, whether I'm swing trading or I'm day trading. Like I always tell you guys, if you guys do have any questions, make sure to put it down in the comment section below. Also, the link to our Facebook group will be in the section below as well, where I put my watch list every single day for you guys to be able to profit off of. And I will talk to you guys next time. Peace.